Time now for an in-depth look at the market news this afternoon, and for that, I'm joined on the line by Mr. Daniel Yu, a global strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, let's start with the Fed's latest Beige Book report. It finds that the Delta variant is weighing on growth, but also that there's significant inflationary pressure, including on wages. Tell us about that and what you make of the situation.
Yes. Well, according to the Beige Book, U.S. businesses are experiencing escalating inflation that is being aggravated by shortage of goods and likely to be passed on to the consumers in many areas. If you look at the national economic picture, central bank reported that growth overall had downshifted slightly to a moderate pace because of the rising public health concerns due to the COVID variant. But overall, it seems that the wage increase is happening, and that is resulting into higher inflationary pressure. And they're saying that inflation is steady at elevated paces, with half of the Fed's 12 districts reporting strong pressure, while the other half was at a moderate pace. All in all, inflationary gauge is showing an increase of 3.6% in July. But most of the other measures seems to be at higher even. So all in all, there's a bit of a concern where the inflation remains to be quite high, while there's an uncertainty about the economy slowing down, which is indicating that there's a trend of a stagflation for the time being. But of course, in a longer term basis, though, the Fed is expecting that the inflationary measures are going to be slowing down gradually, and that there's no major, immediate timing where the Fed is going to raise interest rate anytime soon. All in all, it seems that this is indicating and giving some uncertainty for the investors, and that's why probably the U.S. market is taking some breather for the time being.
Ryan, and stocks on Wall Street were down Thursday despite the weekly jobs numbers this time being a little closer to expectations. The Dow and the S&P were lower for a fourth straight session and 2 sessions down for the Nasdaq. What is the story in the global markets?
Right. I think that if you look at the valuations, it is a bit stretchy for U.S. market. If you look at the Buffett indicator, so-called, which is market capitalization divided by the overall GDP, that number for U.S. is reaching about 207%. And it seems that about 25% of the companies of S&P 500 are having higher than 10 times price to sales number. So all these, valuation numbers are quite stretchy. And that's why even though the unemployment, or so-called the initial jobless claims, came in at much below expectation at 310,000, while the expectation was about 350,000. But I guess people were thinking that is not a strong indicator yet to push up the prices for the equity market, as it's been very strong since the beginning of this year already. I guess there's a continuation of uncertainty regarding the Chinese stocks as well, where the Chinese government continues to intensify the regulatory crackdown on a lot of the online-related companies. And that is resulting into a lot of the IT Chinese companies that are listed in Nasdaq and U.S. market. All in all, I think that it just needs some time for U.S. market to take some breathing time because it has been very strong in the last 8-9 months already, and that the earnings been very strong already, that I think they need some period for market to go up even further. We do think that the market can go up further, but it just probably needs a few months of period of time. As always in the seasonality factors, usually August, September, and October are a period where the U.S. market takes some breathing time, and it seems that it's actually happening right now, and that's why U.S. market has been taking some declining trend in the last 4 days.
And here in Korea, stocks today saw a bit of a dip in the morning, but in the end closing higher, despite foreigners selling local shares. A nice gain for LG Electronics for one, in anticipation possibly for a part in making the Apple car. Tell us about the domestic market.
Right. I think that when you look at the Korean equity market, everybody is feeling a bit burdened because of the liquidity conditions. Only the major net buyer since the beginning of this year had been the retail investors of Korea, while the institution and foreign investors will continue to be a seller of this market. Despite the earnings growth for this year for Kospi is over 70% YOY. I guess it's just that Korea is a very vulnerable equity market with a huge futures and options market. So like yesterday, we saw Korean market falling by 1.5% plus, despite Chinese market recovered in a positive territories, Taiwanese market recovered as well. Most of the Asian market did go up overall, but Korea is the one that showed a declining trend because of these foreign net selling continue to be happening. I guess the uncertainty is there because of the corporate governance issues and some of the government crackdown and government kind of following what the Chinese government been doing in terms of the online companies as well. So all in all, I guess the foreign investors are using this market as a bit of a playing ground per se, with a huge amount of the short selling as well happening. But as of today, we did see some recovery in some of the online related companies as well as the major companies such as Samsung Electronics, etc. I guess you need some time for market to take digest what's happening to U.S. market and also need to see currency stabilizing. We've been seeing the Korean won depreciating from 11.10 level to all the way up to 11.80. Now it's down to as low as 11.60, but it seems that it's not really moving up or down, and it's kind of taking some breathers. So I guess people need to look at this currency movement and look at the earnings number in order for the market to go up in the future. I guess we're not going to see any earnings number happening for the third quarter until late October, and that's why I guess for the time being also for Korea that it is taking some period for showing correctionary period for the time being.
And finally, Mr. Yu, just briefly, there's an issue of the tech giants Kakao and Naver catching the attention of the authorities in Korea, the regulators who are looking at their monopolistic influence in the market. And so their shares were up today, but they've been down quite a bit the past week. Tell us about that.
Right. It seems that it's kind of following the trend where if you look at the Chinese government, they tackled on the internet companies. And for Korea now, they're saying the financial authority are saying that for the product comparison, the recommendation service of online platform, financial platforms such as brokerage, rather than a simple advertising agency per se, and they're saying that it is a violation for Financial Consumer Protection Act. Clearly, this is a heavy, I guess, correction where the investors are feeling very uncomfortable because government is cracking down on Kakao and Naver in regards to this kind of the brokerage services rather than a simple advertising services. And that's why you saw the stock prices of Kakao and Naver going down by 10%, 8% respectively on Thursday. A lot of people were saying that there will be more room for these two stocks to go down even further. But luckily, and also on a fundamental basis, these stocks did recover today. We think that the untech businesses, Kakao and Naver, are showing a very strong top-line growth numbers. And we do think that there's a huge amount of new business areas where these two companies can grow. And therefore, if there's any kind of short-term correction that we've been seeing, we think that that is quite a good buying opportunities. But some people are saying that in the short term, though, the stock prices should remain quite volatile. And when you saw such a huge drop in a very short period of time, it needs some time for it to take strength and then try to go up in the future. We do think that still both of the companies are very cheap on the relatively valuation basis. We think that the fair prices of these two companies are well above the current shelf prices. But nevertheless, for the time being, people are very concerned about the government regulatory environment for these platform companies.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it, and have a great weekend.
Thank you. You too.